Good evening, friends. It's my pleasure to share dais with 12 industry experts today. I'll not take much time. I'm just given 10 minutes. I thought it was 20 minutes. So I have some 35 slides to run through. So what I'll do is relevant slides I will talk, and whichever is overlapping I'll try to skip. I can share the slides so that you can go through at a later point of time. What I'm going to talk about is about what is capital market in India and what's the present status and what's that we need to do to take it forward. There will be a couple of few engineering students who might not be knowing what is capital market. It's very simple. We got independence in 1947 and slowly we started industrializing the country. For the first 30 years you would have seen all public sector units only available in the country and very less of privatization happen. But over a period of after 90s you can see a lot of liberalization and privatization has started happening, wherein private companies have started ruling the fort. And for running a private entity, for running a private business, we require capital. This capital is available through two ways. One is from banks and the other is from the markets. There are two types of markets. One is the money market, wherein you can lend, borrow and repay within 1 year. That is called the money market. The second one is called the capital market, wherein you can list your company in the stock exchanges and raise capital. I'm just going to talk about the capital market situation in India and what's the way forward. There will be a lot of data here. My previous speaker was saying data is junk, but pardon me, I have a lot of data here. We are going to break for tea and leave for home. Before that we'll do some number crunching and leave for the day. Fine. Okay, I'll not touch into the details of it. What I'm trying to say in this slide is if you compare the figures of 2005-06 with that of what we see in 2011-12, the fundamental factors in India, be it GDP growth or be it exports, we have a spectacular figure out here. Okay, next slide. And if you look at the Indian status, we are number 3 in the world with respect to GDP on purchase power parity. That is the amount of things that you procure within the country. We are number 3 in the world. It's close to $4.6 trillion. Okay. And by 2050 you can see we will be surpassing the United States with respect to the GDP based on PPP. And this is a very important slide. See, if you look at the ratio between the savings that we Indians do vis-a-vis the GDP of the country, 32% is the figure. 32% of the GDP equivalent is being saved by Indians in the form of post office saving or in the form of whichever mode of saving. You buy gold or you buy a real estate. So we are doing it into less productive, we are doing a lot of less productive investments, savings. Okay. So the figure is huge. It's 32%. But still we have China, which has more than 50% of the GDP equivalent being saved by the people there. Next slide. This is the comparison between the various big fives. We can see India, it's around 34.2, whereas China it is 53.4. In US and UK the savings is relatively less because the banks doesn't give much interest for a savings account, whereas here we get around 3%, 5% likewise. So savings is relatively less in developed countries. What we are trying to talk in this particular slide is instead of putting all your savings in unproductive or less yielding investments, we should unlock that asset and try to put in high yielding asset classes like the markets. Here see we are saying the GDP is 1.8 trillion. That is in our rupee equivalent, it is say around 32.5 lakh crores. 32.5 lakh crores is the GDP of the country, and even if you assume a 32% saving, of the GDP of 101.5 trillion rupees, if you take 32% as a saving, the total saving done by us in India is 32.5 lakh crores. Even assuming if you are going to shift 10% of the savings into our markets, that's a huge figure of around 3.2 lakh crores that is getting pumped into the country. What is the advantage? Right now we see a lot of companies are running short of funds. They are very eagerly looking for bank finance. But banks has their own selection criteria, they have their own bandwidth, they are not able to fund a lot of ventures in the country. The only way left is these markets. Instead of me putting all my money into gold, instead of me putting all the money into real estates and other less productive investments, I think we should share a small portion of it. And if every Indian is taking an oath that I'll part of 10% of my total 100% saving, 10% I'll put in markets for the development of the country, then we can garner a huge amount towards the development of the country. Next. This again, the percentage of investment versus GDP. Again, our investments is close to 34%, but again, as I told, we'll be investing in less productive or less yielding asset classes. And if you look at the development nature of the financial markets, we are very close to the better lots. If one is the score, the best, we are at 21. We have a lot of countries which are in 3 digits also. So you can trust this market and you can, invest in Indian markets. Next. And if you look at these are some of the advanced countries wherein the yield on the investments in the stock market, it's much better. We are number 2, we can say. So on an average for the past 2 decades, it's been delivering around 14% returns in the equity markets. So rather than investing in a post office or a bank which gives you 8%, you can put 10% of your savings or investments into this market, which is going to yield you more. And in the process, you are going to help industries which are trying to come up with this particular capital. Next. And Asia, if you compare the Europe and if you compare the rest of the world, Asian markets are doing very well with respect to capital markets. So it's again another point which you have to bear in mind that this is a market for us to try. Next. And derivative markets also, there is something called the cash and there is something called derivatives. Derivative markets in India, we are growing at around 45%. That's a decent number. So we can, if at all we have not accessed that market, I think it's high time for us to just start investing and learning the products. Next. And if you look at how the Indian stock exchanges are performing, you see the MCX stock exchange has been accredited as the world's #1 exchange with respect to number of currency contracts being traded. Even in the, even with respect to big exchanges like exchanges across Europe and in the US, India is standing as #1 with respect to number of contracts. We have got a lot of things more to share. Like even if you look at the membership drive which we have done last month, again MCXSX has done a world record by getting the maximum number of members enrolled even before the start of the exchange. We had 700 plus. So we are setting benchmarks for ourselves and we are advancing towards excellence. Next. And our per capita income in India is also growing. On an average, every Indian citizen gets around 50,000 rupees as income. Next, in a year. And it is next to China. If you look at the entire bar, you can see the increment that we get in our salary year on year or increment that we get in our income is next only to China. There are a lot of other countries, developing countries or developed countries which doesn't have this much of increment. So we do have a lot of money to save. Next. And this one graph, sorry for the poor quality of this visual. What it tries to say is like by 2050, 80% of the population in India will be middle class. So what will happen is like the middle class spend in the whole world. Right now India is only doing 5%. From 5% it is going to cross 40-50% by that period of time and will be overtaking the US. So all this rosy picture or green picture, what I'm trying to say is our disposable income is increasing. Our saving pattern is going to increase. So what we need to do is we have to start learning, investing in new asset classes, be it retail people or be it at a higher levels. Okay. And if you look at a comparison of India vis-a-vis the other countries, we are not so great. Compare China, let's see the second column, IPOs. The fund that China has risen through IPOs, companies, is far, far higher than what we did in India. Second, the market capitalization in India vis-a-vis the GDP figure, it's very low compared to the other countries. GDP itself is relatively low, but still we have got a long way to go with respect to, getting more companies listed, providing risk capital to a lot of SMEs and corporates. So we have to do a lot of work in this particular space. Next. And see, we are saying like we have, first I shared a slide saying that we have around 5% share with respect to purchase power parity. But if you look at the pie of the markets in India, the equity and debt market, we are just 1% of the total world's volume. So one side you say we have 5%, and other side we say we are only 1% with respect to our investments in equity and debt markets. So there is a huge disparity. On the contrary, if you look at on the right side, if you look at the bar chart, Indian markets are growing at a rate of around 23%, but still we are stuck and stagnant with respect to our penetration into the equity markets. Next. This one very alarming slide, just compare India and China. The population in India is around 12-20 million, of which only 1% is accessing the capital market. Of 100 crore people, example, only 1 crore people have PAN card. Baki 99 crore is left untapped. If you look at relatively the so-called communist country like China, the penetration of markets in the communist country is much higher. It's 15%. So we have a long way to go with respect to penetrating into the markets for getting the products reachable to all people. Next. This again, the last bar you can see, this is a tier 1, tier 2 and tier 3 comparison of penetration of products. The tier 3 and in the rural areas, there is a lot of disposable income that is left, which is not being tapped and saved properly. I'll tell you, when I was working in Erode, the amount of deposits that was kept in post offices was much higher when compared to the deposits that was kept in banks. That means, one, it is lack of awareness, or it is like they don't want to disclose, or it is like they are not reachable. Products are not reachable to the rural customers. So we have huge potential in the rural and upcountry markets, which has to be tapped for investment and from the savings point of view. Next. And next slide. Next slide. This talks about the various sectors, the industrial sectors in the country, but you can see only 2 or 3 segments are able to get money from the capital market. Baki segments are not able to get risk capital. So there is a lot of disparity and a lot of things has to be worked out in these segments, for which we have to bring in awareness to public also with respect to investment, so that they will be investing into the newer emerging segments rather than concentrating only on the big ones like the banking or manufacturing. There are other segments like printing, electronics, paper, which are like just like that left without getting funds. Next. And this is a graph which talks about the various developed countries, wherein the gist of the graph is like there is a lot of gap left with respect to penetration of products. There are some 7 products here which we are talking about. Market penetration is very low, and there are a lot of products which are available in the international markets which are not available to us. So there again we have a huge gap left. Next. This primary market data, this fund raised by various countries in one particular month. You see, India stands a lost. If you say even smaller companies, they were able to raise more money than India. So again, it is lack of awareness. Next. Wholesale, we have something called a bond market in the country, but unfortunately it doesn't have a secondary market wherein the retail people can follow up. So there is again a huge lacuna which we have to work upon and get people operating into this market also at the retail level. Next. There is another beautiful product called interest rate derivatives in the US market. Okay, if you look at the total business that is happening in the US at the retail level, 85% of the business is happening through the interest rate derivatives. But in India, we are a big fat zero. Though the products have been launched twice earlier, but it did not reach the retail level. So again, we are stuck. So we need to work on this particular product called interest rate derivatives also at the retail market level. Next. Competition. This is one slide which I want to share. It might be sounding Greek and Latin for a few of you. See, 10 years before, when telecom industry was more of a monolith, more of a PSU style of operation, not much of services were offered to customers. Once the privatization has started, you got a lot of benefits in the telecom industry, same with banking industry, and same with insurance sector. The same style of thing is going to happen in the capital markets also, We are coming out in the equity segment. We are already there. So more competition, more players, it's going to benefit the end customers. Next. This again talks about the product grid. A lot of products are there in the international market which are not available to India. So you have to get all them in. So before we get them in, we have to get the LKG, ABCD studies, all the trainings ready so that we can get into the exotic and higher end products. So here again, we means I am talking about the entire India as an entire country, as an investor, as an exchange. We have a lot of work to be done in this particular segment. We have to educate all these things to our citizens. Next. MSMEs is a big grey area. We have close to around 26 crore MSMEs in the country, but hardly 5 to 6% are able to get funds for starting business or running business. So this is a huge area of focus, wherein this is going to generate close to 10 crore new employment in the coming decades time. So we are trying to focus in this segment also, wherein we will be having a separate platform for SMEs, trading platform for SMEs, wherein they can raise their risk capital. Next. And what is in it for me? Okay, this is a number of exchanges, number of brokers, number of sub-brokers. You see, total tally. What I'm trying to say is, year on year, there is an increase in these numbers. That means that many number of employment is being generated. Post your MBA finance, you can join any of these entities into research, into business development, into back-end operations. So on an average, it can easily generate more than 1 lakh to 1.5 lakh jobs year on year. You just need to see which slot you are going to get in. Next. So we have taken up 10 milestones. You can see it in our website itself. Mainly we are planning to focus on getting in awareness to the retail customers. We want to penetrate from, right now the products are available only in 2,000 centers. We want to take it to 5,000 to 6,000 centers, and we want to concentrate on new products like interest rate derivatives, bonds, corporate bonds, and this is what we have given as a public declaration, and we are not going to wait for 10 years to see whether we reach it or not. Every 3 years we will have an audit being done by an independent authority which will say, yes, MCS has told they are going to do this, whether they have done it or not. There will be a periodic audit and they will be appraising the public on whether we have done it or not. Next. So these are the recent developments in the capital market. A lot of new initiatives are being taken. Rajiv Gandhi investment scheme is helping even the rural people to invest 50,000 rupees and get tax exemption out of it. So let's all work on our strength. I have a lot of other slides. I had close to 55 slides. I had to cut it off and made it 30, assuming that I will be given 20 minutes time, but I was supposed to compress it to 10 minutes. So I didn't do justice to these slides, but still I can lead this presentation so that you can go through when you are free. As a closing remark, I would like to say, like in South, the penetration of financial products and the acumen to understand financial products, we are relatively more risk averse. We think a lot, whereas in North, people are more aggressive with respect to financial products. South is relatively low with respect to acceptance of new products and taking it seriously. We have got a long way to go. Let us try to assimilate these products. Let us try to invest in capital markets and be a part of the development role in the national building process. Thank you.
Now.